Welcome to Sweet Life Beat Life. We hope this video helps.
You begin by locking down essentials, account settings, fee structure, and order types so surprises don't eat your returns. Fund a separate trading bankroll, then place your first real trades small, 1 to 2 positions, each about 0.5 to 1% of equity. Use limit orders and immediate stop losses to control risk. This teaches discipline. Once placed, watch execution quality and fill price. If slippage appears, reduce order size or use iceberg-style pacing to minimize impact. You refine entries by combining a precise setup with a confirmation signal, price action candle, volume spike, or indicator cross to improve probability. Once a trigger hits, scale in. Start with 1/3 of intended size, add 1/3 on confirmation, finish the last third only if momentum persists. This reduces emotional sizing errors. Make sure to log slippage, trade duration, and realized outcomes automatically. Over time, you'll see which entries need tighter rules, or you close trades according to an exit plan, preset target, trailing stop, or a time-based exit, so emotion doesn't decide. After every session, conduct a quick review. What rule triggered the trade, what emotion influenced choices, how execution matched the plan, and where deviations happened. If you still lose, troubleshoot. Switch to paper trading to test rule tweaks, cut position sizes until consistency returns, and rewind execution logs to identify systemic slippage or recurring mistakes.
Thanks for watching. Consider subscribing if we helped you.